Hello everyone, my name is David and today I'll be doing a financial analysis on Peloton. So a quick introduction about Peloton. Peloton is basically a technology company. It provides interactive fitness products and also subscription-based products. Their products include, you've probably seen this on TV, but they offer stationary bikes, treadmills, digital fitness classes so that users can access this at the comfort of their home. And so during COVID-19, Peloton rose sharply. It was popular during COVID-19 pandemic as more people turned to home-based fitness solutions. And more than that, the company prides itself on offering high-quality products and building a loyal customer base. So first off, we're going to take a look at the balance sheet of Peloton. Mainly, we're going to look at liquidity and solvency. Here are some important factors when evaluating Peloton's financial health. Peloton is basically showing a strong current ratio of 2.4 in 2022. This basically suggests that they have sufficient current assets to cover their current liabilities. This basically means they have good liquidity and they can meet their short-term obligations. However, it is important to note that Peloton's debt-to-equity ratio of 5.8 is a bit risky, and this basically suggests that Peloton is heavily reliant on debt to finance its operations. This is going to be a concern for investors as it increases the company's financial risk, and also it impacts Peloton's solvency. Lastly, we're going to take a look at how Peloton is managing its assets. So Peloton's accounts receivable turnover has increased from 2019 to 2021. It basically indicates that the collection of AR is pretty efficient. However, in 2022, it had decreased, which basically suggests that customers are having a problem paying the company. Overall, Peloton has a strong liquidity and its reliance on debt and a decreasing accounts receivable could be a concern for investors. Next, we're going to take a look at Peloton's profit and loss statement. Peloton basically experienced a significant revenue increase up to $4 billion in 2021. However, that slightly decreased to $3.6 billion in 2022. Overall, the company has maintained a strong revenue growth rate over the few years and consistently. However, it is important to note that Peloton has increased its operation expenses due to its investments in sales and marketing, research and development, and administration. Peloton's profitability, and when we look at the net loss, that has increasing towards even larger losses. For example, in 2020, it was about 71 million, and in 2022, that had increased to 2.8 billion. So that's going to be a huge red flag to investors. Next, we're going to analyze Peloton's DuPont ratios. Peloton's return on equity, net profit margin, asset turnover have all declined from 2020 to 2022. This basically indicates that there has been a decrease in Peloton's efficiency in generating revenue from its assets. Meanwhile, Peloton's financial leverage ratio has increased. This basically implies that Peloton has taken more debt to finance its operations and its growth. When trying to make a decision about Peloton's financial health, to ride or not to ride, Peloton has been facing major losses as indicated by their negative net profit margins from negative 3% in 2020, negative 4% in 2021, and negative 78% in 2022. Additionally, the company's return on equity and return on assets have been negative. This basically suggests that they're not generating profits efficiently using their assets and shareholder equity. Despite that they have consistent and significant revenue growth over the years, Peloton, they're struggling to turn growth into profitability, and for these reasons, Peloton is not going to be a good company for stockholders and investors. Some key takeaways I'd like to leave with you is that Peloton is facing major issues with its mismanagement. It has no historical financials, and its revenue is declining, and as we've seen in 2022. The company is burning its cash from its operations according to its cash flow statement, and right now the future of Peloton is unclear unless they can start getting some traction in its revenue. Moving forward, the company has been operating at a losing rate, and they basically need more capital. As we've seen, they're starting to finance their operations more with debt. Moreover, Peloton has a new CEO and CFO, and they're currently restructuring the business to turn it around. The company has also signed an agreement to borrow more money to help with this turnaround. Overall, Peloton is in a difficult financial situation, and they need to make significant changes in order to become profitable and sustainable long term. Thank you for your time.